stock market is going to crash big time, biggest crash in history. So it hasn't happened yet.
The inevitable question is, do you think that we will have a crash or not?
The answer is we will have a crash. I just can't tell you when, and I can't tell you how deep.
That was Robert Kiyosaki and Andrew Ross Sorkin, two of the latest talking heads to predict the stock market crash. Like the rest of the doomsayers, they're wrong. The stock market can't crash. It has to go up forever. With AI coming to replace jobs, young people not buying homes or having kids, and nothing on the horizon to stimulate growth in the economy, the system can't afford stocks to crash. But here's the kicker for Gen Z. This doesn't help you because you don't own stocks or homes, the two things that the system's propped up on currently. And newsflash, with inflation on the horizon, it only gets worse from here. Bitcoin is a life raft. Bitcoin is the only realistic way for Gen Z to try to build wealth. You need to pay attention before it's too late. And if you're skeptical, I break down why it gets harder from here if you don't own assets. Assets like Bitcoin. This is Dante Cook with Bitcoin Simply. Let's go.
There are some economists who suggest that because Mr. Trump ties his success to the success of the market, that he's not going to let anything like what happened in 1929 happen, and that we should feel secure because of that.
I think it's hard to know how things get out of control. When confidence disappears, it happens like this.
So you spent nearly 10 years on this book. The inevitable question is, do you think that we will have a crash or not?
The answer is we will have a crash. I just can't tell you when, and I can't tell you how deep. But I can assure you, unfortunately, I wish I wasn't saying this, we will have a crash.
Hot garbage. We'll have a crash. Can't tell you when, can't tell you how big it'll be, but it'll happen. He's dead wrong, and his thinking is stuck in the past. A stock market crash cannot happen in our current financial system. Let me give you a breakdown of how the world has changed and why 1929 isn't realistic. Point number one, the Knicks are going to the finals for the first time since '99. The last time the Knicks were in the finals, gas cost $1.11 a gallon. A dozen eggs, 95 cents. The median home price, $158,000. The Dow Jones, under 11,000. The euro was just 5 months old. It shows you how much the world can change in 25 years. And right now, we're going through a massive change in the financial system in the way that the world works with so much debt and people have their heads stuck in the sand. The realities for our parents aren't the same for Gen Z and younger. It's bleak.
And first-time home buyers at a historic low. 20% of all home buyers before the '08 collapse, it was about 40%. What the hell is going on?
Well, I think this is why young people are so mad today. I think there used to be starter homes, not these 5, bedrooms, 5 baths that exist in all, communities around the US. We used to have homes that were 1/3 to half the price of what a starter home is now in the US, with the average price of a home being $400,000. And then, simultaneously, young people today, their wages haven't increased. So, in the 1940s, 90% of young people, they earned more than their parents by age 30. Today, less than 40% of young people earn more than their parents did at the same age. And so I think young people aren't just quiet quitting. They're not just logging off and doing TikToks. They are really looking at the numbers and saying, why don't we have starter homes? Why aren't we earning more money? And student loans. Not only your home's more expensive, we've got this massive debt on top of us that we can never get rid of. And oh, by the way, we were told that if we went to school, we got good grades, and we got good jobs, we would have the American dream. And that does not appear to be happening. You're right.
The American dream is broken, dead, and gone, replaced by debt and servitude to a financial system that doesn't reward people who don't own assets. The dream was sold to our parents in the form of cheap homes and cheap stocks. The stock market is making asset owners richer than ever. The value of equities held by U.S. households is $58 trillion, which is more than the total value of real estate by $9.8 trillion in America right now. The widest gap in history. Equities count for a total of 33% of total assets and a record 47% of total financial assets. The S&P 7,500, the Dow 50,000. The market that we're in is completely ridiculous. And if it were actually fairly valued off of real value, real earnings, well, it would have already crashed a long time ago. Stock market concentration is at its highest level ever. Stocks have rarely been this expensive. With 145 years of data, the Case-Shiller index to the S&P 500 ratio is now 40.8, which means investors are paying $40.80 for every $1 in earnings. Something's not adding up. And look at this. Nvidia, just one company, is now larger than 7 of the 11 sectors in the S&P 500. All utilities, all real estate, and all materials combined. It's larger than the German economy, and it accounts for 20% of the S&P 500 gains. But here's the crazy part. With all of these records and all of this growth happening, well, consumer sentiment is at its lowest. That's because there's a difference between Main Street and Wall Street. People who own assets, mainly people who are older and our parents, and those who don't, the ones struggling to stay afloat right now. When someone says the market is crashing, it can. And let me show you why in one chart. There's this thing happening right now, and it might be due to technology, it might be due to unaffordable home prices, but right now, the US birth rate is declining and declining rapidly, meaning people aren't having kids. And we also have this thing happening right now, AI replacing entry-level jobs. And with the market and the value of homes being so high, and the next class not owning them, you cannot afford for the market to crash. And so young people, they're having to compensate for all of these challenges by going further and further out on the risk curve and taking more risks. Take a look at this chart right here. 62% of investors under 35 say that they have to take excessive risk in order to reach their financial goals. 43% of investors under 35 trade options, more than 4 times the 10% of over 55 investors trading options. Almost 30% of investors under 35 have purchased meme stocks in crypto assets, while it's just 2% of people over 55. Young people think they need to invest in scams or altcoins in order to get ahead. But newsflash, I'm here to tell you, there's only one asset built for this time, a financially stable asset that's being adopted by the traditional financial system, but it's also digital, it's also native, it's also cyberpunk, it's also outside of the current system. The people saying don't invest in crypto are former crypto shillers.
Well, my next guest shook up the crypto world recently when he said that most of the crypto industry is dead and they're never coming back. I'm going to bring in now professional capital management founder and CEO, Anthony Pompliano. My man, when you said that, it was like a shot across the bow, maybe a shot into the bow. What exactly are you talking about?
Well, think about sports, right? You kind of play middle school sports and high school sports, and then a very small percentage of people, they get to go to college and play sports. And then eventually there's even a smaller percent they get to go play professional sports. Same thing's happening in the crypto world. If you're good enough, you're going to get adopted into the traditional financial system. So I think Bitcoin, stablecoins, equity infrastructure, and tokenization, that's going to graduate to the professional leagues. Everything else, you're going to get left in high school, man. It's just,
really?
It's not going to make it.
I mean, in a way, that's kind of good, right? Because it feels like, there was one point where there was new stuff popping up every morning you wake up and there's 20, 30, 50 different things and people didn't know what to do. They were throwing their money at everything. It might be better at the end of the day for investors, no?
Well, you want competition.
Right.
And we've had a lot of competition, but the free market ultimately is going to determine the winners. The beauty of this industry is that the market is the referee. The market's going to determine what's valuable. Now, what you have is you have very sophisticated large pools of capital coming from the traditional world, and they're saying, okay, here's all these things that we could invest in. What are the things that we think are large, scalable, resilient, and asymmetric? Right. And I think those 4 things that I described, that's where their capital is going. And so that's why I say the crypto industry is dying. But this isn't new. Go back to the 90s. We talk about internet entrepreneurs, internet companies, right? Now we just call them entrepreneurs and companies. And so the idea of crypto is still going to be alive. But the word crypto, in 5 years, we're not going to use that word anymore. And it's just going to be, it's Bitcoin, just like gold, oil, and anything else. Right. And if you got a crypto coin, it's going to go to the wayside, because if you can't make it in the traditional financial system, you ain't going to be able to make it.
And he's not the only crypto guy saying everything else in crypto is crap. This is also coming from Arthur Hayes.
Sure, and I guess liquidity will not flow everywhere. I mean, the good thing about Bitcoin is that if there are more units of fiat tomorrow than today, it will go up in price mathematically. Just that's pure math. But like everything else is very narrative driven. The only things that are really doing well, if you think about like sort of global capital markets, is AI stocks. Period. End of sentence. Right. Everything else is pretty much fucked.
Everything else is cooked. Buy Bitcoin and never sell it. Look at Bitcoin's track record. When you look at the amount of time that you hold Bitcoin, well, the returns have been pretty good. The compounded annual growth rate versus the S&P 500 and gold far outpaced them. So Stanley Druckenmiller says you don't get rich by investing and diversifying into 50 mediocre assets. You invest in 2 to 3 with asymmetric return opportunity. You can be like the Mavs and try to sell your stars. Or you can keep them and ride them and never let go of them. That's what we preach every single week. And that's why we partner with Ledn, the leader in Bitcoin-backed loans. Ledn allows you to keep your Bitcoin stack and never sell it, and also never accrue capital gains. You have an appreciating asset borrowing in depreciating dollars. Funds flow into your account in less than just 6 hours. And there's no credit checks. And it's at about half of what you could get with a real credit card. Go to learn.ledn.io/simply or use the link in the description to get started. Never sell your Bitcoin. And you want to protect an asset that continues to go up in value and over the long term. You don't have to go at it alone. Work with a coach at the Bitcoin Way. They'll walk you through step by step what this Bitcoin thing means, why it's part of the traditional financial system, but also the things that made it the rebellious asset that cannot be controlled or adopted by anyone. And it gives you that freedom and capability if you hold the keys and you do it sovereignly. Schedule a 30-minute meeting with the team and they'll show you exactly what this means. Go to thebitcoinway.com/partner/Dante-Cook. All of the stuff that I'm telling you isn't a new thing. Bitcoiners have been saying this for a long time.
Yeah, well, I think the overarching dynamic is that the currency supply measured in dollars is continuing to expand, probably expanding 7% a year. It's been expanding about 7% a year for 100 years. And that currency printing goes to finance wars, foreign wars, trade wars, social programs, government deficits, any kind of political program. And I don't think that's new. It's been going on for thousands and thousands of years. The last 2 years have been no different.
And would you say, therefore, it is those people who don't own assets are paying for government expansion without even realizing it?
I think everybody pays for government in their own way. It's true that people that don't own assets are suffering from that monetary debasement without realizing it for the most part. Government's expensive, right? It's always very expensive whenever you have political ambitions, and it's got to be paid for either with taxes or with inflation or with some kind of confiscation or regulation of some sort that impairs somebody's property rights.
There hasn't been a big crash, but somehow you feel poor. Somehow life feels harder. And this is the explanation. You have less purchasing power. You have less confidence in your future. And because the money printer continues to run, assets cannot crash. We would have no tax base. We would have no assets for estates to get taxed when older generations die off. It's simply untenable. They must continue to inflate assets. But the problem is these assets are so expensive that it's hard for you to afford them and to accumulate them in any meaningful way. You need to understand why you need to start thinking in Bitcoin terms. You can't actually see the problem unless you reframe it.
The house is being used to debasing of money, right? And so the house value versus the money has gone way up, and the families can't live in the houses anymore. It's owned by, and so the entire system degrades by the same money. Right. And it's breaking down faster and faster. And people are taking all this leverage to try to live in a house because they think that's their only way out to escape the financial nightmare that they're in for their money losing value. So they're essentially storing their purchasing power in a house because it can't be stolen as fast as money. Right. And then they don't realize that then the taxes are going to go way up on the house. And they don't actually own their house. They're paying a huge mortgage to be able to have the privilege to rent a house from the government.
Yeah, it's more of a trap than anything.
And it becomes a trap, and they go into that. So then the foundation of society starts to break down. You need two incomes to be able to afford the house. Kids kids don't have one of the parents at home. Things start to change all across this, and it gets worse and worse and worse. From the alternative system, from Bitcoin, it's repricing the house, right? So my house was 6 years ago, 300 Bitcoin. Now it's 15 Bitcoin. 4 years from now, it'll be 1 Bitcoin, right? The house was never going up. It was going up according to infinite monetary units.
Mm-hmm.
Fixed monetary units, it's going down.
Fix the monetary unit. Watch your wealth increase. The best fixed monetary unit for Gen Z and younger is Bitcoin. And hopefully you wake up to that reality before it's too late. One of the ways that you could do that is by subscribing to the channel. We drop fire alpha like this 7 days a week, and we keep you ready informed as to what's happening in the world to protect your assets and your financial future. One of the ways that you can continue to get ahead is by owning assets. You can own a digital asset in Bitcoin and a Bitcoin mining machine, infrastructure, something that participates in the AI infrastructure energy trade that's going up right now. Work with SAS Mining. You send them money, they buy you a Bitcoin miner, they keep it up and running, and sats flow directly to your wallet, making you sovereign in more ways than one. Use the QR code in the info and the link to get started. This is Dante Cook with Bitcoin Simply. Happy stacking.